What is going on, investors? Hopefully you guys have a great day out there. Time to talk about Twitter, ticker symbol TWTR. When we last visited this company, it had a massive down day. As I recall, it was trading at about $50 per share, and it went all the way down to about $40 per share after recording their Q3 earnings, which definitely disappointed investors. Now, the stock has made a nice recovery. In fact, when we get over the stock chart, the stock is making an interesting formation, is kind of following a very predictable pattern here. So we'll talk about what the setup that it's making and how you could potentially take advantage of that depending on how you might want to trade Twitter. Now, their Q4 numbers came in. Everything looked good from the revenue and kind of the profit side, especially in the quarter itself was actually pretty good, although user growth fell short. And I think people are going to be quick to maybe blame that, hey, the company banned President Trump and that might have hurt user growth. Well, keep in mind that the president really wasn't banned until after the quarter was over. And so we really won't see evidence. If there is an impact of President Trump not being on the platform, we really won't see evidence of it until the next quarter. So another 3 months or so from now. Now, the company did give some guidance. We do see here that Q1 is guiding from $940 to $1 billion in a revenue. And now they're guiding between either break even or a $50 million loss. And so I thought that was kind of interesting as well. When we get over to the numbers, we'll actually show that that's actually a pretty dismal quarter for Twitter. Now, the other thing that they announced in their press release was that they're anticipating to grow their headcount by about 20%, and they expect total costs and expenses to grow by about 25%. So this is a company that's still investing pretty heavily in their business, even though they've been around quite a while. Now, the other thing that we're seeing here is I believe that internally inside Twitter, and there's also some activist investors that are kind of pushing for this, people are realizing that this company just is never going to make a lot of money through online advertisements. Okay. When we get over to the results, I'll show you this. Okay. It's really clear that Twitter is probably never going to be a gigantic company in the online advertising space. There's just a lot of competitors out there. So what they're trying to do is research other revenue options, including a subscription offering and things like that. And I thought some of these were kind of interesting. They're considering a tipping option or small payments that users can give others for exclusive content. And I actually think this is a good idea. Kind of revenue sharing on these social media platforms is kind of foreign outside of maybe like a YouTube, which shares revenues with creators like myself and others here on the platform. There's other things like they could charge for TweetDeck and, other features like maybe an undo send or things like that, which I think will be less popular and probably less material to the business. I think this tipping idea is actually kind of interesting. We'll see which way Twitter decides to go. When we jump over to the user growth, we do see evidence of it topping out. We've got monetized daily active users. This is worldwide. It went from 1% last quarter growth to 3%. So up a little bit. We see here in the United States, we went from 0% growth up about 4%. So again, not great. It's basically, I feel like these numbers have plateaued a certain degree. And international, which is not a great sign for Twitter because actually you see the bulk of their monetized daily active users are actually in the international market. It's actually not here in the United States. They have 37 million monetized daily active users here in the United States. They've got nearly 5 times that, or about 4 times that in the international space at 155 million. You see here we went from 1% growth to 2% growth. So you'd like to see either that accelerate or them to be able to monetize those users in a different format. Now, jumping over the numbers here, we got 3 months ended here, a year ended here. Notice that our revenue in the quarter actually up nicely. This was actually a pretty good quarter. This fourth quarter was. We went from 1 billion up to 3 billion. So up about 30%. Our expenses actually grew quite a bit too. So we went from 854 to about a little over $1 billion. Now, I want to keep in mind that we gave that guidance for the next quarter. We're coming in at 940 to $1 billion in revenue. So it is coming in light, much lighter than this quarter and even lighter than the previous year. So Twitter is already kind of forecasting a very light quarter in the next quarter. And they're also projecting between a $50 million loss and break even. And we see here in the Q4, how much money did they make? income before income taxes here, they made about $224 million. If you want to come up here for income from operations, we made $251 million. In the previous quarter, we made $152 million. That's back in 2019. Now, for the year ended, paints quite a different story here. We made $366 million income from operations, all the way down to $26 million. Keep in mind, the valuation on Twitter is at $46 billion, and the company's been around a while, and they only were able to churn out $26 million in terms of operating income for the full year in 2020. And the bulk of that actually came in this last quarter, in the fourth quarter. And again, we're seeing in Q1, they're kind of guiding down for that. So not great, honestly. It was a pretty bad year from a net income perspective. We lost $1 billion. Last year, we made $1.4 billion. Next quarter, they're projecting either break even or a $50 million loss. All in all, not that great. Although investors are giving Twitter a pass, this stock is up in the after hours. Now, let's jump over to the stock chart. Really interesting here that Twitter has really just channeled out, and this upper end of the channel is holding true, and I would expect this. We actually see the stock is stopping right here on this upper channel. Now, two things happen when this stock gets to this upper channel. The highest probability thing is it gets rejected here at 61 and retraces a little bit. It could come back down. This lower channel is not really in place anymore. Okay, it kind of broke through it here. You could say maybe we get that back intact here, and this lower channel is in place. So, $57, $58 per share would be the first stop, in my opinion, where if you wanted to jump in here and get on the Twitter bandwagon, would be where I would get it. But I do see this as an area where you could potentially sell if you have Twitter shares, or if you're playing this as an earnings pop. I think you could comfortably sell your shares up here in the $61, $62 range, because this channel has held true 1, 2, 3, 4, 5, 6, 7. I mean, like a dozen times over since April. This upper channel has proven to be the upper channel where the stock, when it hits it, it sells off. Now, it hasn't sold off very hard. In fact, it stays within a pretty tight channel until we got to this area. So that's just what I'm seeing with Twitter. I really think Q1 is going to be an interesting one. They've already guided to pretty weak revenue, honestly, and really weak profit. So I'm wondering if they're already internally at Twitter kind of seeing that user growth after the elections and things like that, not just the former president being kicked off the platform, but in general, just kind of lighter user, activity on the platform. They're already kind of factoring that into the revenue. And not only that, they're starting to talk up even more these other revenue subscription models and other ways to make money, that Twitter kind of realizes that they're going to have to make some changes. So we'll see what Twitter is able to do. Right now, investors are liking what they're seeing. We'll see what happens in the next quarter. Let me know down in the comments what you think about this one. Would love to hear from you. Thanks for tuning in. Good luck with your investments.